Well, hello everyone. Welcome to Trading Price Patterns. My name is Barbara Armstrong. I'm a coach with Schwab, and today I thought we could focus on generating income in our account using options. So let's say that you want to take a vacation, or you want to buy some new living room furniture, or whatever it is, maybe not an entire a new piece of furniture for your house, but because we have a $25,000 account and we're looking to generate some income that we could withdraw from the account without compromising or having to use that 25,000. And so we're looking to set a goal of maybe earning $100 a week, or $200 a week, so that we could take that money out for whatever that purpose might be. So that's going to be our topic for today, generating income using options. And we've got a couple of different types of options trades that we're going to look at. We have three positions in our account that we are going to have a look at and do a little trade management on. And we're going to respond to any questions that you might have. So feel free to fire away. We have got the fantastic Mr. James Boyd hanging out in the chat. If you are not following him on X, you are missing out. So you're going to want to correct that immediately. So consider this your invitation from James and I. James Boyd CS, Barb Armstrong CS. The scammers and impersonators are back in town. I've reported 2 today. Just know that no coach will ever reach out to you and offer a Bitcoin deal, a crypto deal, private education for a fee, or the scariest one I've seen is give us your account password and we'll go in and trade for you and split the profits. Yeah, that's not James. It's not me. It's not a Schwab coach. So don't fall for that. And look at the number of followers, and if they ask you to follow them, if you're already following us, then you'll know right off that it's something you want to take a screenshot of and send to James or I so we can get them shut down. Okay, so know that options carry a high level of risk and aren't suitable for all investors. You have to apply for option trading privileges with Schwab, and not all will qualify. So I'd hate for you to be practicing like a maniac in your paper money account and then go to finally place your first live account and not have it go through because you forgot to apply for option trading privileges. So we use the Paper Money software application on the Thinkorswim desktop. It is a brilliant place to learn and hone your skills and become familiar with the platform. One of the nuances or differences is that short options will never be assigned early in Paper Money. That can happen in a live account. Okay, just so you are aware. Yeah, we've got some live events coming up, over 20 scheduled this year. If you've never been to a live event, I loved attending them as a client. As most of you know, I am I was a client first and embraced this education and joined as a coach back in 2016. So anything is possible. We're going to really skip the market overview today because Kevin Horner does such a great job at the Market Open. You can, go to that class and get the news of the day. But know that I posted on X, and I'm sure many of you are aware that both the NASDAQ and the S&P hit new all-time highs yesterday. So we're going to focus on our trade management and then placing new example trades. And so when we come out to the Thinkorswim platform, like I said, and once again today, S&P 500 hitting another new all-time high. Oops. NASDAQ, within a stone's throw of it. Okay, both indexes up over 20% in the last year. So let's start with a little trade management. We have an iron condor on Dollar Tree. And we put this on back here on January 24th. It expires Friday, and it's just kind of rolling along doing its thing. And, we only have a couple of days left. We will close this one out on Friday if it hasn't hit our target by then. Our target was an 80% gain. but we've had a little bit of volatility happening in the market. So, if we come and we look at our iron condor here, we're up 40%, but it's still, at 74.63, it's still, 250 below, our short call vertical strikes. And in an average day, this could move 250. Like we had a big move yesterday, so we'll watch it. But for sure, we'll close it out prior to expiration. So that's that one. And Internet of Things. So Internet of Things, we did this as an income generating strategy. And so far we're up $352, which represents a almost a 7% gain. Now, the most we can make on this is if it goes to $55, and it's gone up above that. It's trading at $59.46. So are we crying in our cups on this one? No, we are not. Because, we did this as an income generating strategy. Before we placed the trade, we said, hey, if we could make 6%, we'd be happy campers. And so we're going to happy camper it. We are within pennies of our max gain on this. And so never say, well, it could never come back below, or we could never end up losing. If you say that, just go put some soap on a toothbrush and give them a brush. Wash your mouth out with soap, because you never know what can happen. What the market giveth, the market can taketh away. So we are going to cue Steve Miller and take the money and run on this one. We're at $54, and 93 cents when I last looked. So we are going to right click on this, create a closing order. And we're not going to get more than $55 for this. So we're going to say, hey, if we can get, $54.95, that's within a nickel of our max gain, we'll be pretty happy with that. Actually, let's make it $54.90. There we go. Okay, so we're going to exit that position. I'll make sure that one gets filled. And then the other one I wanted to look at was XEL. So when I look at these, why might I want to look at XEL? Actually, it's not our stock with a target. So we're underwater just a smidge on this one, but we put this trade on Monday. So, we've got some ways to go. But I wanted to look at the long call on this because we did a 1 ATR trade. And when we come and we look at the chart on this, so we put the trade on Monday, and here's our 1 ATR target here. And then we bought the stock, and here's our target for the stock. Oh, look at that. Cha-ching. We're out of our IoT. So that can go in our holiday coffer or our furniture coffer, or, whatever, our little bit of profit on that one. So here's our stock target, which is higher. But the rule with this 1 ATR trade is at the end of the second day, if it hasn't gone up and hit our target, we're going to move our stop up to 50 cents below the low of that day. So we're looking at the low of yesterday. It was 68.27. And so we're going to subtract 50 cents from that, and we're going to move this stop up to 67.77. And, our stock, we can have this show on the charts. I just find, when we're talking about this, it just makes it easier to see. So, and the way we actually make that happen is we're going to come to our working orders. We are going to look for XEL. And here's our call. And we are going to click on the 3 little lines. Some people call that a hamburger. We're going to cancel and replace it. Okay. And then when we get to cancel and replace, we're going to click the sprocket that has our conditions, and we're changing the 67.17 to 67.77. Hit save. Our target stays the same. Confirm and send. And this is our 1 ATR with our new stop, our new exit. And that's how we make that happen. So, we've just looked at 3 positions, took profit on one, adjusted a stop on one, and agreed that we're just going to be patient on the iron condor. Okay, so what might we look at in the new realm? Well, we hadn't done a lot of iron condor, so I thought maybe we could look at another stock that's been going a whole lot of nowhere. Actually, it's been trading in a pretty big range. When we look at Micron, it's been trading since last July. So this is a fairly long time here. It's been trading since last July in this big range, that's gone between kind of 113-ish down to 86-ish or maybe 85. And so when I looked at this before class, what do we have here? What's this pattern called? And if you're not familiar with it, I'm going to post a candlestick kind of summary sheet on X today, so you'll want to check that out. And we're going to talk about this candlesticks next week in getting started with technical analysis. But this is a bearish harami where today's candle is inside the body of yesterday's candle up near a potential resistance level. And even though it's not that high, what you may have noticed, because I know you guys are a sharp bunch. By the way, do we have anyone here that is new to this class or new to, Schwab webcasts in general? So we've been seeing, high, lower high, and another lower high. And so I was just thinking, could we, just let me make a note here. Could we leg into this? Because one of the things that I like to do, and there's a lot of things I like to do, but with respect to iron condors, I always want to see what each side is contributing. So if I want to be down here around the 86 or the 90 level, I'm going to come out here, say to March 30th. And if we look at, say the 115, we have a 22% chance of it being in the money come March 30th. We've got tons of volume here. A 46% chance that it could come up and touch it. We do have a 7-cent bid-ask spread, so we're good there. I say, well, if I was to sell this vertical, what would I get for it? Ooh, 87 cents. Now, if we were just doing this as a short call vertical, that wouldn't be enough because we're coming up 30 days. We'd want at least a 30% return. But if we're looking at this being only half the trade, so, and then the idea is when it pulls back, we'd add in the short put vertical piece. And if we did that, say at this, what was it? Let me come back to my chart. Okay, around the 90 level, say the 90 and the 85. So what we're doing here, if you're new to this, and this is an intermediate level class, so I'm assuming that everyone that is here is familiar with some of the basics of technical analysis and trading options. If not, can you tell I was posting things on X a little earlier? Is we're looking to create a credit spread sandwich where we want to put a short call vertical on here. And the idea is that our expectation is it will continue to trade below. And then in a couple of days, given this does pull back as we're expecting it to, then we add the short put vertical on somewhere around the 85 or 90 mark. Okay, so, and the goal with the short put vertical is it stays above here. So as long as it continues to do what it's been doing, and there's no guarantee that, past performance is going to, show us exactly what it's going to do in the future. But it is currently the way the stock is trending. So if we come out and we look at this and said, well, if we sold the 90, we'd only get 50 cents for that. where, if we waited until it was closer, we might get double that amount. And so we are going to leg in. And then the last question is, do I want to sell the 115, which is up above here, or might I be comfortable selling the 110 that I might receive a higher credit for? So if we come and we leg in today to the short call side, because it appears to be bouncing down off a resistance level, and we talked about resistance level yesterday and getting started with technical analysis. So if we did this 110, 115, we get a credit of $1.36, which is enough even for a standalone trade. And what do I mean by that? Well, I mean that if I'm going to, let's switch this gadget here to our calculator. So if I'm making $1.38, what am I risking? Well, I'm risking, 362-ish. So that's a 38% return. And if we're doing just a plain old short call vertical, that would meet our requirements because we're in it for 30 days. And our example trading plan says we want to get at least 1% per day we're in the trade. So we're just going to put this on. And how much are we risking? We're risking $350. Now, when we add the other trade, the short put vertical piece, we'll get another credit. So that will, take away from the risk. So we're going to do 2 of these. And that's the reason why, even though it appears that the risk is going to be 700, if we get another dollar on the other side, then that would, keep it within our guidelines. Okay, so we're going to do 2 of these. We're risking 730. But the plan is, when we get the other side, added, that it will decrease our max loss because we'll be receiving another credit. So I'm going to put this into our iron condor bucket. And this is our example of legging in to an iron condor. Okay, does that make sense? Are there any questions on that? So Thea's asking the question, hey, this touched the resistance level 6 times. And we discussed this yesterday. I'll put a link into the Getting Started with Technical Analysis series in the class from yesterday. But the way technicians or people that like to look at charts look at it is every time it comes and hits this resistance level, the resistance level becomes stronger and harder to penetrate. And the same thing with support levels. And like my analogy is, if you picture a line of medieval knights, every time it comes in and touches this, another knight comes to guard the line. So there is significance to this, to the length of time this has been in this trend. So great question. Okay. Okie dokie. So that's our first one. We're legging into an iron condor. The goal is to be out prior to expiration. We'll be out one way or the other prior to expiration. That's part of our trading plan for this strategy. And if you're wondering where these trading plans are, let me just bring up a window, and I'm going to cover 2 things. One, if you haven't already subscribed to this network, to this YouTube channel, you'll want to do that. This is Trader Talks from Schwab Coaching, and it's on YouTube. And what will come up is whatever is currently being taught or what's up next. If you come to playlists and you scroll down, look for a pink thumbnail. And when you come to view full playlist, I am creating a list of example trading plans. And so here's the example trading plan for short call verticals. I haven't got the Iron Condor example trading plan in there yet, but stay tuned, will come. And then down at the bottom, if you're new to Thinkorswim, and I know we have some new people today, so welcome. There's a bunch of short videos down here on just how to customize your monitor tab and a watch list and all that kind of good stuff. So just so that you know that resource is there. And then yesterday, there's a playlist for every class, including this one. But in getting started with technical analysis, which is right here, we talked about this support and resistance yesterday, trend and support and resistance. Okay, so you can tap into that. And if you're new to options, here's options, basics and strategies, kind of a 12-week series. The other question that was asked before the class started is, how do you find the schedule of these classes? So if you come to schwab.com, coaching, and these are the in-person events. So if you've never been to an in-person event, they are free to attend. You just have to click the learn more and register. And particularly if you live in anywhere in the Phoenix area or you live in Chicago, I am going to be at the event in Chicago in March for this 2-day advanced workshop. Would love to meet you. So, feel free to join us, but I'd encourage you to sign up earlier rather than later, because these do fill up quickly, and I'd hate for you to be disappointed. So the schedule for these webcasts is right here. So we're looking at a month at a glance. And so here we are today. We're, partway into our day. Oh, that's the 19th. Sorry. Oh, yeah, today is the 19th. Okay. We're trading price patterns. Next up, getting started with Thinkorswim. And then we've got Mr. Boyd ending the day with trading growth and value stocks. If you've never gone to one of James's classes, you're missing out. You're going to want to check that out. Okay. And if there's a particular instructor that you really like you say hey, James, when else does he teach? You can come here and just click on James and you'll see that, he teaches every day, every single day, as do I. Okay. So that's that. So back to our regular programming. Okay. So that is Micron. How about we look at AppLovin? It capped up last week. So it's interesting because I brought this up as an example of a stock, that has moved really bullishly. And often what happens when a stock gaps up is it establishes a new support level. And this one was red when I last looked at it, and it's now, up on the day, actually up 0.5%. And so could we look at this and do either a short put vertical as an income generating strategy, with the expectation that it's likely to stay above the 470-ish level, or could we do a long call vertical? Now, this is almost a $500 stock, so we can't afford to buy a call like we did with XEL, because buying a call, if we come out to March, it's $42. We'd be risking, and how much can we lose when we buy a call? We could lose all of it. But could we, it's at 498.68. So could we buy the 490 and sell the 500? We've got hundreds of contracts here. We've got a 98.9% chance of at least it coming and touching, a 46% probability of it being at or above 500 come March 21st. So if we look at buying a vertical, what would that cost us? $4.35. How much could we lose? $435. What's our break even? This is a modestly bullish trade, because this only has to go up by 77 cents and stay up by at least 77 cents, and we'll have our max gain on this. And, and our goal, if you look at our example trading plan under the mini sessions, our goal on this would be just over $6. And so we're saying like, hey, if we could make $220, we'd be happy. We don't have to make 565. We don't want to be greedy. We just would, a 50% return in 30 days would be pretty amazing, right? Right. Okay. So, and our break even on this is $4 below where it's currently trading. So we're going to come back here. We're going to do one because we're risking $500. And we're going to come to our single order, make it a first trigger sequence, right click, opposite order. We're going to multiply that by 50%. So that's 250, say 265. Oh, sorry. 490 times 1.5, 735. Make that good till canceled, confirm and send, and we are going to put that in our long call vertical group. Okay, fire in the hole. That was out. Now, would there be enough premium for us to consider selling a put vertical with the expectation that we believe it will stay over 470 and we could compare the two? Well, let's come back to the trade tab and look at the 470. Now, again, could we just buy a put sell a put? If we're bullish, we can't because it's $2,600. We also, if the stock were put to us, we couldn't afford the $47,000 price tag for, 100 shares. We only have a $25,000 account. So we are going to come and look at selling a vertical. Now, the reason I don't usually look at these with this size of account is because it's $10 wide. Our risk is going to be too high. It's $640. And there's no other side that we're going to add to this. And we don't want to risk more than 500. So when I come to confirm and send, we're risking $675. And even though we may get out at a profit, that's a little less than what we were expecting, one of the rules that we don't like to negotiate with is our position sizing rules. So someone's asking, hey, if you hit a 40% profit in 5 days, would you close? I think a 40% profit in 5 days. How many people would be happy with that? I sure would. And I know James talks about that. Like if you're expecting to be in this trade for 30 days and you've got, you're 80% of the way to your goal in a very short period of time, would you take the money and run? Absolutely. It's absolutely something you might want to consider at least. And we do have those conversations. And we do look at these, trades where we have a target. And when we start getting close, we look at it and evaluate whether we want to stay or not. Okay, let's look at Boeing. So Boeing spent, most of last year on the struggle bus, right? This is only a 9-month chart, but if we come out and look at the last couple of years, there's been a little bit of rock and roll here, but, since December of 23, most of last year was, I'd call this a black run as a skier. That's a pretty steep incline, my friends. But, then we got to, I guess about August, and it started setting up this big cup and handle pattern. And I actually just posted this on X as well. But with a cup and handle pattern, what are we looking for? We're looking for a breakout. And so we did see the breakout. It came back to retest. It came up again, pulled back. And, yesterday we had a harami. Today we have this doji pattern, which indicates that, the buyers and the sellers are duking it out, but it looks like, the buyers are saying, hey, this is not a bad price here, or they seem to be willing to support it. Now, could we be wrong? Absolutely. It could come back in here and come all the way back down. But if we're seeing this as a potential support level, could we maybe sell a short put vertical around this 180 and get enough premium for it to be worth our while? Yeah. And just if you're new to all this pattern recognition stuff, this is what I mean when I say an inverted head and shoulders. So here's one shoulder and the second shoulder, and here's our head. And, a technician would say, what's this range? Well, we've gone from, say, 137 to 180. So that's about a 43-point range. And so their target might be up here, ultimately around that 220 level. And we know it's been there before, just hasn't been there anytime lately. Yeah. And so let's look at this 180. Okay. Somebody's saying, Boeing tends to, manage to pull defeat from the jaws of victory. And I think we can all relate to that feeling. Yes, an inverted head and shoulders pattern is bullish. And you can also look at this as a cup and handle pattern, and these are consolidating patterns. Now, there's another one that, that I also just posted on X. And, when we come and we look at this one, you see this it's kind of a sloppy inverted head and shoulders or, cup and handle pattern. But what's missing on this one? What's missing on this one is the breakout. So cup and handle, we'd measure the range the same way, but where's the breakout? Hasn't happened. And so what do? Take one hand, take the other hand, we sit on them and we wait. Now, some people might say, oh, I think that's going to go through. Well, but we don't trade what we think, we trade what we see, right? I'm not seeing a breakout. You might see something different. So back to Boeing. Well, so when we come to the trade tab on this and we come out and we say, well, we could do the monthlies, and this is 23 days. What's the advantage of that? Well, our time decay is going to be accelerated because we're in it for a shorter period of time. But what's the advantage of going to the monthlies is that we've got thousands of contracts. So we've got a lot more liquidity, even though the bid-ask spread is about the same. Okay. And where did we want to come to on this? We wanted to look at around the 180 and it's trading at 185. We can come to a shorter time frame here. So we're going to look at this 180. We're going to come out to the monthly. So we have a 15-cent bid-ask spread. Our example trading plan, does it trade 1 million shares a day or more? Check. Do we have lots of open interest? Check. Do we have a tight enough bid-ask spread? It's about 15 cents, so 5%, less than 5%. Check. So we're going to look at selling a vertical. So then the next question is there enough juice for it to be worth the squeeze? So if we're making potentially $1.52, that's what we have the potential to make, and we divide that by 350. Oops, sorry. Let me do that again. 150 divided by 350, which is what we're risking, $5 minus the $1.50. That's a 42.8% potential return. So we're going to say, okay, that meets our criteria. How many of these are we going to do? 1. Why 1? Because 2 would be 600. And that's more than we want to risk. So we're going to create an opposite order. Say, hey, when this is worth about 30 cents or less, please buy it back and take our risk off the table. Now, somebody asked the question earlier, like our goal is 80%. What if we made 50%, by Monday of next week? Might we take it? We may well do that. And I treat this class as a companion to the Trading a Smaller Account that we get together for on Mondays and Fridays at high noon. And so feel free to check in on Friday. And if this really moves dramatically, and we have a 50% gain, by Friday, might we just take the money and run? We might. We'd at least discuss it. I like to run it's a semi-democracy. So that's our short put vertical. So we have a long call vertical so far, a short put vertical, and then we're legging into that potential iron condor, and we've, closed out of a couple of trades. So what else would we like to look at? Well, and this is kind of a similar looking candle. Well, that's what it was. So a Spotify, one of my favorite gifts that my kids have ever given me. I listen to so much music and so many podcasts on Spotify. And everybody has their favorite service. But this one has been on a tear. It's up 40% year to date. And so you might be thinking, well, it gapped up on earnings. Like, have we missed it? But it looks like it came up, pulled back a couple of days, hit a new high just 4 trading days ago, pulled back. So we've got this kind of bull flight pattern happening, and it's moving to the upside again. And this is a very expensive stock. So we couldn't afford to buy many shares, even if we had the money in our account. But could we do, a long call vertical on this with the expectation that this might continue to the upside, and so let's come to the trade tab. It's trading at 640. So could we come out to March and do the 640 and the 650? We've got a couple of hundred contracts. Now, this bid-ask spread is $1.45, and you might be thinking like, ooh, that makes, this one is under $1 at the 650 level, but on a $25 option, if it's under, $1.25 or so, it's certainly under 250. So it's under 10%, which is our requirement. So if we look at buying this vertical, it would cost us $473. It was recently, at 652. So it's not that big a stretch. In an average day over the last 14 days, the stock moves $20 from top to bottom. So, might that be an opportunity? And we're paying $473 for it. So if our goal is to earn 50%, our target price on this would be $7.09. And so we're going to come to single order, first trigger sequence, right click, opposite order, and we're going to make that 7. We'll make it 710. I round it up in a fit of enthusiasm. And so we're risking 473. The most we can make is 527. That's over 100%. Now, if this gapped up, could we make a little more than the kind of 250-ish that we're aiming? Well, now it's almost $5. So, sorry. So this should be closer to 750. That moved quickly. We'll make it 750. Good till canceled. Fire in the hole. Okay, so that was Spotify. Now, what else might we like to look at? And we're going to wrap up now, but here are some things to keep in mind and that we may come back and revisit on Friday. But do we have a similar pattern here on Verizon? this inverted head and shoulders. We placed a trade on this in our technical analysis class yesterday, based on this candle, but we've just got confirmation on it today. So, there's a breakout. And if you were looking to generate income, what type of trade might you consider? This is also a stock that pays a dividend. And I mean, one of the things about dividends is, one, there's no guarantee they'll continue to pay them. But two, you don't actually get paid a dividend in paper money. You do in a live account if a dividend, is paid. But I just wanted to point that out. But is that one that we might come back and look at again tomorrow or Friday? How about Cisco? This one has had a really nice uptrend, up almost 10%. I mean, we're not even, through the first 2 months. We're only halfway through February. It seemed to do well on earnings here, kind of gapped up and moving to the upside. And, with all the tariff anxiety going on now, might this be impacted? Hard to say, but that's something we may want to take into consideration also. Triple M, but Verizon, is kind of tariff agnostic because it's a service. It doesn't, it's not a product being shipped across borders. And here's another stock gapped up on the last earnings, seems to have consolidated. Could we come here and sell a short put vertical? And we may have time for one more. So here's our baseline at 147. Could we sell a vertical around maybe that 145 mark? And here it's saying there's only a 34% probability of it being in the money at expiration. That means you've got a 65% probability of it expiring worthless. And then the next question is, so we have a tight bid-ask spread, lots of volume here. We technically have an entry. Next question is there enough premium? Well, $1.20 divided by 380. I'm kind of rounding here. Is it more than 30%? Drum roll, please. 31.5. So how many contracts could we do? One. Now, if you had a bigger account, could you do more? Yeah. So when we've got 80%, and this is just a guideline, so that if you're out golfing or skiing or playing with your kids or grandkids, whatever it is that you like to do, that, it could hit your target first thing in the morning and you'd be out. By the time you got out of bed, especially if you're living in California when the market opens at 6:30 as opposed to 9:30, right? Yeah. Okay, so we're going to put that in our short put vertical. So we saw it and we decided we'd sneak that in. Okay, so that was Verizon. Okay, so one of the questions that's come up in the surveys quite often, or requests, is that, can you review what we did today? And the answer is yes. So let me come up here. And so we did a short put vertical on 3M. We did a long call vertical on Spotify, a short put vertical on Boeing. And I didn't plan this so that, the color coding would be lovely, but that's just the way it turned out. And then we did a long call vertical on AppLovin. So that's 4 trades. And trade number 5, drum roll please, is Micron. And Micron, we're legging in is the goal to a short, an iron condor. Now, let me just scroll up because I saw, way back when at the beginning of the class, there was, I'm pretty sure, a survey posted. And here's the deal with the surveys. Let me just make sure it's there. Oh, here we go. Let me just repost that. So you only get to participate if you're here live. But if you'll click on that link, there's 2 questions. 1 is I hated it, 10 is I loved it, and then everything in between. And if you put comments in, I promise I will read each and every one. And so will the management team. So you have a voice and it's your chance to use it. If you'd hit the like button, it helps move this webcast up in the YouTube algorithm so more people can find this content. It is your opportunity to do a favor for a person whom you may never meet. So it's a chance for you to rack up your good deed for the day. And then don't forget to subscribe to the channel and follow James and I in the land of X. We would love to see you there. So I think we've done what we set out to do today. Oops, except that I brought up the wrong agenda, but here we are. We've done what we set out to do. I appreciate each and every one of you being here. Thank you so much. Don't forget to check out James's class this afternoon, and I will see you tomorrow in after the close. Bye for now.